Hi, everyone, and welcome to another episode of Living on Blockchain. Today, we are speaking to Johannes Schweifer. He's Dr. Johannes Schweifer. He's the initial co-founder of Bitcoin Suisse, one of the largest crypto trading companies in Switzerland. And he's also the CEO and founder of CoreLedger, a blockchain software development company based out of Switzerland, Crypto Valley. So he's a frequent speaker at Web3 forums. He's a lecturer at blockchain course in Lucerne University of Science and Technology. And he has been around for a while. Again, somebody who has experience on the academic side of things as well as the business side of things. His insights were great, and this is a conversation I can't wait for you guys to hear. So let's deep dive right in.
Hi, Johannes. Thank you so much for making the time to speak to me today. How are you doing?
Fine. Thank you very much, Tarusha. It's a pleasure to be here. So all good.
I'm really glad that you could make the time to speak to me today. So for our listeners, would you like to set some context and tell us about yourself and your journey so far?
Yes, sure. Actually, I'm a chemist, so my background is really engineering and technology. I studied chemistry at the University of Vienna, and just more or less because most people who are in engineering later end up in consulting. I also went into consulting and came to Switzerland. I'm originally from Austria. In Switzerland, I met a guy who told me about Bitcoin. That was in 2011. And I learned that you, Tarusha, you have also been in Web3 more or less, also since 2011, right? So you're also one
Yeah,
of those early movers.
yeah.
Yeah, the only thing that you could do back then was buying Bitcoin. So that's exactly what I did at a very modest price of 4 euros. So I'm still happy about that decision back then. And
Right,
as everybody, I regret that I didn't buy more, right?
right. Don't we all?
Yeah, but anyway, after that, we decided to found a company, a trading company for Bitcoins. Of course, it was in Switzerland, so the name is Bitcoin Suisse, and the company is also known beyond the borders. But actually, because I'm an engineer and not a trader, I didn't really like that business. I mean, nothing against making money by trading, but I always wanted to build stuff. So therefore, I founded CoreLedger in 2017, and that's exactly my current company. So what I'm doing is basically the same, finding technological solutions for other people's problems. So yeah, that's my background.
Okay, awesome. That's very interesting that you're a chemist initially, and you came across decentralized tech and Bitcoin, and you were sold pretty much like the rest of us, and you haven't looked back since. But can you tell us a little more about Core Ledger and what it kind of does, and what does the user journey look like?
So, as I said, we are a technology company. What we built is a platform that allows companies, our customers, to easily and quickly launch their own blockchain project. One thing is really important to note. It's not just about tokenization, because tokenization is a very simple process, actually. So you just launch a token contract and boom, there you are. And then there are the usual DeFi questions such as where do I list my token and so forth. What we built is a bit larger because we anticipated that regulatory issues would prevent you from just launching a token. So the question was always, what can you do with the technology? I mean, what can you really do? Just and of course, besides just tokenizing things. And one of the most logical steps was, you can document. And there is now a large variety of areas where documentation is important, such as supply chain management, certification of authenticity, of origin, and so forth. I mean, I mentioned I'm here in the heart of Europe, right? And the EU is passing laws one after the other, which is all about documentation and supply chain tracking. So here, blockchain technology can help a lot. And also the trading aspect, so the DeFi aspect is a very important one because with blockchain technology, you can do things which you simply cannot do with real world software, such as immediate transfers from two parties. That's the atomic swap, and many more things. So what we did at CoreLedger was creating what we call an operating system, token economy operating system, and now it also evolved into a document economy management system. And the concept is creating software on this basis with a combination of those operating system commands plus white label software that we also created created. So we have, for example, a template for building your own blockchain apps. We have a white label portal, like a web interface that can be used for, well, trading, of course, OTC trading or doing a token sale. We have modules that allow to do voting, what not else, governance, of course. Oh yeah, governance is a very strong pillar. So everything is about rules, and the way how you create and manage rules is really essential. And of course, we have a large management interface to create digital assets. And that is important. We refer to them as digital assets, not just tokens, because they don't need a quantity. A digital asset comes with a unique digital ID. And that's exactly what it is about. So all in all, what we do is we help our customers, first of all, understand the new technology and how they can use it for the maybe already existing business processes. Then we sketch a solution where we use as many already existing elements as possible. So to make a solution on a budget, on a narrow budget often. So because it's mostly about doing MVPs or POCs. And then we build the software with our components. So that's in a nutshell, in a very big nutshell, actually, what we are doing.
Awesome, awesome. So I would imagine for the kind of services that your platform, your company provides, team would be the USP because you would be able to only help out and create these components and integrate these components in existing solutions with a stellar team. So would you like to talk a little about the team behind the venture?
To talk about sorry, what?
The team behind your venture.
Ah, the team.
Yeah.
Yes, of course, most of the team members are engineers. So we have blockchain developers, which need to be, which are trained in different smart contract languages. Lately, we also adopted Rust because we integrated internet computer. Not sure if you're familiar with that technology. So it's a new kind of blockchain infrastructure. And we have a very strong focus on Microsoft technologies. So, of course, it's all about .NET. The team size is 18 people at the moment. And because we are in Switzerland here, we have a core team, which is basically doing the project management, internal and external. And most of our additional team members, which are not part of those 18, they are outside of Switzerland, and we scale basically with partners. So we have created a very efficient team structure, which combines the strength of highly skilled professionals here in Switzerland and the possibility to upscale.
All right. So by internet computer, you mean ICP? Is
Yes,
my
I mean
understanding?
ICP.
Yeah. Okay. So you are working with them closely?
Actually, very closely. Yes, we are one of the first integration partners.
Wow.
And our strategy here is basically to cover the entire space from lead generation, so getting people or finding people who want to do a blockchain project, to implementation and delivering the project, and sometimes also maintenance and operations. And well, Internet Computer, they're providing a great infrastructure. So it's really one of its kind infrastructure, right? With end-to-end encryption and high protection and focus on cybersecurity. And that's exactly what the industry needs. So when we are talking about industry use cases, cybersecurity is a very strong argument, actually. And when you can secure, let's say, the essential parts of your infrastructure against cyber attacks, this is a big value for most companies, and also a reason why they adopt blockchain technology at the end. And well, Internet Computer, I mean, they're also here in Switzerland. They're in Zurich. The headquarters is here, so they have, I think, something between 150 and now even 200 people in Switzerland. And it's also really fun to interact with them because they are super highly skilled cryptographers, engineers. So it's really also a nice community that has grown here.
Lovely. That sounds great. And I think I had read up a little about ICP, and from my rudimentary understanding, it is a public blockchain network, right? And it's being touted as being powered by the new science from first principles. So I think this can be a very interesting collaboration, like you have mentioned. Now, talking a little about the kind of projects that you have worked on so far with CoreLedger, can you tell us a little about that? What is the kind of niches that are coming up more and more? Do you see more projects dealing with AI and with DeFi? Like, what is usually the niche with which you kind of pick these projects from and start working with them?
Very good question. Actually, we are active in very different areas. Of course, also tokenization, as I mentioned initially, as you can imagine. But the most important thing is now documentation and certification. So we are working, for example, with BlockSense, also a Swiss startup, on the Swiss digital battery passport, which is a certificate that most people don't know is required starting from 2027 in order to track where the materials for a battery came from, where they are going to. And it even makes sense from an ecological perspective because most of those components of batteries, and of course everything now is going into e-mobility, right? So you need more and more batteries. So the components of these batteries, they are not super ecologically friendly. So it's nickel and other stuff, and sometimes lead, right? And to track where the stuff comes from, where it goes to, and how, to which extent it is coming from recycling is really important. I mean, it makes sense. And blockchain technology provides for a very, let's say, cheap way to not only track it, but also prove that this chain of events has not been breached. You can imagine this a little bit like with a car, where in order to increase the value of the car, you just drive backwards. So you count the kilometers backwards. That was possible like 30 years ago or something. And today, the value of the car, or actually the value of the battery, is the duration or the number of cycles. So if you're able to forge this document about the number of cycles, then you increase the value of your battery. And that's exactly what shall be prevented, amongst other things, by the battery passport. So there are really compelling use cases behind that. What else? Notarizer, for example, that's a very simple way to kind of make a snapshot and then document it on blockchain without actually revealing the picture or the attachment. So it's just the hash that has a timestamp where you can, for example, prove before signing an NDA that you already possessed some information. That can also be worth millions sometimes, that you are able to prove that in a dispute. What else? Fine metal. That is a very important project for us because tokenization of real world assets is, I would say, amongst the hardest things that you could try.
Yeah.
And Fine Metal already tried that initially in 2019 and failed because they just created a fungible token, and the market of the financial regulator said, well, it's a fungible token. I mean, whatever you call it, whether it's a storage certificate or something else, it's still a fungible token. So it's a security, and you cannot trade security tokens. It's just impossible. What we did was turning the token into a personalized document. It's still fungible. So you have you have fungible units. So you can store as many of those items as you want, but it's not transferable between customers. So the result, it's called digital fine gold, DFG, is a personalized asset that you can trade 24/7 and down to a tiny fraction of gold, so down to milligrams. But it's still digital, but physically backed. So there's really a storage. And all the gold that is digitally bought is also physically stored in a bunker in Switzerland. But the digital handling provides an advantage over buying it in physical shape and then having the problem of storing it in a safe place, because the storage is already included in the price, and that's a big advantage. So in other words, we simplified the way how tokenization can be done by doing actually a digitization. And this saved us all the regulatory overhead and hassle. So really, there were no headaches with that project. It's a document, so it doesn't add any additional regulatory overhead. It's not a security token, and that's exactly what Fine Metal always wanted. And well, that's it, right? So that's one of its kind also.
This is
It's
very
called.
interesting. Yeah.
Sorry.
No, go ahead. Please finish your thought.
Just wanted to add, we call this a non-fungible asset, NFA.
Okay, this is a very interesting way. of doing real world tokenization. I think I have been there, done that. I tried to do that along with my co-founder, real world asset tokenization for gold and silver. And we used to keep facing a lot of hurdles. There are a lot of compliance issues, a lot of regulatory issues, and then, figuring out where the gold is going to be stored, the insurance, all of that. It can be very tedious as a process. And I'm talking about this like in the context of maybe half a decade back. So, the regulatory landscape was even more not that developed, so to say. So this is a very interesting take that, you're calling them NFAs, and this is how you're going about doing it. So have you been able to do this successfully for one particular platform or many platforms so far?
So the NFAs are very new. We just released it last year in December, and the project will also be presented publicly in March in Frankfurt at the Crypto Asset Conference.
Yes, I was wondering. I've never heard of it. I was wondering how because I usually take a lot of interest in real world tokenization because, like I said, we tried to do it and we were not very, very successful. We could only do it in some jurisdictions. So this sounds like a whole new way of doing this, which can be successful from the looks of it.
Yes, because we have adopted a totally different stance. I'm cautious with the regulator, and every time there is some issue that requires the regulator to draft something new, you have the risk that this new thing will not be in your favor. But if you try to find something that already exists, it's super hard for the regulator to say, well, wait a second, no, wait, we don't agree with that, right? Because it's existing law, and the regulator, I don't want to say they're lazy, they are not, but they don't want to touch things that already exist because that gives everyone a headache. And especially, for example, in gold trading, there's a plethora of laws already. So therefore, touching this is difficult. So with the NFAs, we found a way how existing regulation can be used, and the added on feature, such as having a digital version of this storage certificate, that's not an issue. Therefore, we are actually proud about this solution. In theory, it can also be used for bearer shares. Sorry, not bearer shares. Registered shares for equity and a couple of other things. So it definitely works perfectly with everything that you can store.
This is, as I said, this is sounding wonderful. And if our listeners or, my curiosity is piqued, if I want to read a little more about it, where can I find some documentation or a white paper about this? Have you published anything yet, or are you waiting to unveil it once you do that in Frankfurt?
No, there's already a white paper on our website. There's a document section or e-paper, e-book section where people can download it. Yep. It's still very general there. The specific project, there's also a link on our website, I think under case studies, where people can find that. So digitalfinegold.finemetal.ch is also the link to the trading portal.
Awesome. I'm sure to look that up, and I'll put that in the episode description as well. So, we've talked a lot about what your venture does and your experience so far, but because I have realized over the years that the best way to sort of make your message clear, perhaps to the listeners, is to talk about the challenges and the lessons that you've learned so far in your journey. So, can you perhaps share an anecdote or some key challenges and key lessons that you have learned along the way while working in this space?
Oh my God, how many hours do we have?
Exactly. Yeah, I feel the same thing. But perhaps something that will be that is right at the top of your mind, and it's always there at the top of your mind. I know that there are one or two that are always playing at the top of my mind when I think about challenges. So I'm sure that is the case with you as well. So can you perhaps share those?
And I have many challenges, but actually, the biggest challenge that we have as a company is the reputation of blockchain in the industry that we actually want to win as customers. Because Bitcoin, when it came out, first it was unknown, but sooner or later it gained a certain bad reputation of being in the money for, let's say bad things, right? And therefore the industry thought, we will never touch this. And everything else using and utilizing blockchain technology was also always connected with Bitcoin and those stories, which, well, some were true, not all of them were true, right? But we have a big reputation, or had actually a big reputation issue. Luckily now this has subsided, and we can talk really openly with the industry, but there's still a lot of reluctance simply because people are not educated in those fields. And when we say we work with blockchain technology, many say, oh, no, we don't want to touch Bitcoin, right? And we are not working with Bitcoin, actually, we're working with blockchain technology. So Web3 was a big relief, simply because Web3 is much, let's say, it was, or okay, still is pristine in some ways, right? So it's innocent, and it also sounds more innocent than blockchain technology. But nonetheless, this is still a challenge. And therefore, we had sometimes headaches. And also, we are addressing the industry, and the industry normally takes a decade or longer to adopt a new technology. In other words, now is the right time to do something with blockchain technology. But we're already on the market since 2017. So we really had a hard time to compete against those projects which were just about the hype, riding the hype wave, making a token sale, cashing out, maybe doing a rug pull and running away. And we always wanted to do serious business, and we do serious business. And serious business means you need a good business plan. Your target segment is not about just speculation. The target segment is about real utility and added value and long-time investment, like with gold, right, and such things, or having no investment value at all and just providing added value by having a cheaper digital product than compared to something else that is maybe connected with real world processes and so forth. Or cybersecurity. You cannot really measure cybersecurity unless you already had a breach, and then most likely the company is already gone, right? So this is really hard for us to compete against hype topics. We are not a company which promotes meme coins or something. We never ported our operating system to Solana, and often we got requests in that direction. So, hey, can I launch my token with you? And we already knew, okay, it will be a meme coin, right? Well, okay, we have Polygon and we have Internet Computer. And it's like, no, I want to launch on Solana. Why? Yeah, because Solana is very, very popular right now for meme coins. So, okay. That's what we were always fighting against. Or okay, on the personal side, of course, I have a long history with Bitcoin, and I spent many years at Bitcoin Suisse doing all the administrative stuff. I was president of the board for 3 years, and well, it was difficult from all kinds of perspectives, such as banking. Nobody in the banking world wants to touch you if you bear a blockchain label. Even worse, so if you have Bitcoin in your name, right? Bitcoin Swiss was always a red flag. So getting a bank account for Bitcoin Swiss, heaven, that took. I mean, okay, we got some bank accounts, but we also lost them. So it was not really advantageous. Of course, CoreLedger is a different animal here, and we never took any token money or something. So therefore, we got a bank account easily. We maintained it so far without any problem. So the banking issue is not one any longer for us. But sometimes it's an issue for our customers, because we also offer interfaces to payment services, and the credit card companies, they have an issue with everything token, with everything blockchain. And it's not just about the payment processors, it's really about the issuers of the credit cards. So when MasterCard and Visa say, we don't want to touch this business, the processors have no choice. They just have to deny your business. And that's bad. Or getting a bank account is also difficult for most companies, especially here in Switzerland, because nobody wants to lose his correspondence banks, because that's a big issue for banks and so forth. So yeah, banking, regulation, hype, expectation from the audience. Also, the difficulty with product market fit. Many people who come to us with the real world project, they think they can just tokenize something and 10 days later they are rich. Nobody realizes that, first of all, it takes a year or longer to prepare a token sale and get ready for the market, and less even less people realize that tokenizing a real world asset doesn't attract the normal audience that you have with speculative tokens because of volatility, because of the fact that you cannot lose your money, which is a bad thing actually for speculators, because if you can lose the money, I mean, if there's a risk, right, then there's also the chance to have a tenfold, hundredfold, thousandfold gain on it. You cannot expect that with a real world asset. I mean, real estate, the only way a real estate object goes to zero is when it's consumed by flames. To go tenfold, unlikely. What can happen that the real estate goes tenfold? I don't know. So it's a different business model. And this problem that many of our customers expect something unrealistic from the market is really, it needs a lot of education and whatnot else. So I can talk for hours
Yeah.
about such experiences. And
I
it's
think
just scratching the
yeah,
surface. Sorry.
yeah, absolutely. I think that our industry faces a perception problem. The problem is that the way we are perceived and the way the technology is perceived, it is still seen like a Ponzi scheme, still seen like a get rich quick sort of a scheme, which is so far from the truth because the technology itself is what will change the way so many industries work at the moment. And education, like you said, is the key. We need to educate people and for them to have a better, perhaps, understanding of the space or better perception of the space. So I completely agree with you. I think perception, education, regulation, all of these can be very big challenges. I think even nowadays, if you are dealing with crypto, and I have an example from just a few days back, I think I was talking to a friend and Coinbase was trying to send them money, and the bank account actually sent that money. The bank basically sent that money back. Instead of accepting that credit transfer. So that it doesn't make sense, just because it was crypto funds, it was not allowed to actually reach that particular bank account. So I think we still have a long way to go, and people don't necessarily understand the space that well. And that is obviously a very big challenge when you're building here.
But actually, I disagree with it. There's a lot of Ponzi going on, and when
Yeah, that is
banks
true.
reject money, then it's not the usual narrative which crypto maxis normally push that banks are evil and they want to protect the business model, blah blah. Some might, but the problem with a bank is the compliance effort. So they don't make much money on even on a million that they receive. But if they bind the compliance team for, let's say, a day to find out whether or not the money was coming from a legit account or is really money laundry, or at least seen as money laundry from one of the many regulatory bodies, then they have an issue, because then they spend a lot of money on resolving those issues and they make a loss. And therefore, they don't want to touch that business because there is a lot of fraud going on. I can personally confirm this. I've seen so much and so many
Yeah.
fraud cases, and banks are allergic to that. Therefore, when you come and say, I have this great project and I will do a token sale and so forth, they see 10 red flags and run away screaming. So getting a bank is difficult. And then there are some banks which say, of course, we take that business, but you have to pay for it, right? And every case will cost you, I don't know how much. And even setting up the account already costs 50,000 Swiss francs, like one of the banks here in the ecosystem claims, and so forth and so forth. But it's understandable because I also know a bank which lost a correspondence bank, and losing a correspondence bank, especially for US dollar transactions. And if you only have two of them, right, and you lose one, this is devastating. Losing the other one, and you can never ever do any US dollar transactions for any of your customers. And therefore, they prefer to rather throw you out and not keep you, because it's a hot business. That's the reason behind. Most people don't see that, and yeah, I've also seen
No,
the other side.
I totally get that, what you're trying to say. Obviously, banks are trying to protect their interests as well as the interests of the user base at large. The example that I was trying to give you is of an individual trying to receive money from a frozen account in Coinbase because Coinbase stopped its operations in India. And
Ah,
then the government of, I think, Wyoming had taken over those funds because they had
Mhm.
handed over those funds to that particular government. And now that particular government department is trying to basically send that money back to the user because it was there and it was frozen in the Coinbase account because they stopped operation almost at a very short notice. So, for a bank account to say that, okay, you're getting like a credit transfer, but you're not even going to check with you and we're just going to send it back, it is just a hassle. It is not that this money is coming from a crypto transaction. It's coming actually from the government department, but that is just trying to reimburse and send back the money to this person's account. But having said that, I totally understand what you're saying. Obviously, been around for so long, so I understand that there's so much fraud going on. And we touched and talked a lot about meme coins, right? And there are so many rug pulls, and there are so many of these coins that keep coming up, and they have no real use case. There is no business model. It's just there for a quick, making a quick buck of, for the creator or for a certain set of people. So obviously, I understand why we have the perception problem, and I also think that this is something that every new technology kind of battles, because the scamsters and the fraudsters will find a way, and they never really leave. They'll find a way to sort of milk the new tech, which is what is happening in our industry as well. But I do think that we still have more good players than the bad ones, and hopefully this is something it'll pass, and as we kind of mature as an industry.
Fingers crossed. Yes.
Yeah, you and me both. So can you tell me a little about, from your experience, which industry has been more open about working with blockchain tech or decentralized tech, or which particular industry you've seen the most change happening in the last, say, 5 years in terms of adoption to new technology?
Of adoption. Do POCs and MVPs count? Because then clearly it's the financial services industry, because there it was a no-brainer that sooner or later blockchain technology would take over as a safe medium to do transfers. Most promises, however, didn't mature so far. I mean, many banks launched already POCs or MVPs and also invested millions in that. The question is, however, if that will ever be really fruitful. Of course, the incentive was clear. Many startups in that space, such as Bitcoin Suisse, they created a totally new business, trading in cryptocurrencies, trading in tokens. So financial industries thought, that is interesting. That's a new business model, right? So not just savings or some loans and whatnot else, but trading cryptocurrencies. That is something we could also do. So they started corresponding projects, and now here in Switzerland, I think even the cantonal banks, they are now offering crypto trading. They don't do it themselves, however, they just use intermediaries, but nonetheless, I mean, financial services industry, no brainer, of course, they do it. What we see at the moment is actually not really industry specific, but actually catering to a certain need. I mentioned it in the beginning, which is the need to have proper and unforgeable documentation and certificates, because there's so much product fraud going on that it's an issue. And having an unforgeable certificate and a way to attach that forgeable certificate to a real world product is actually an advantage. Apart from catering to the regulatory needs, such as how it's called I don't have the English translation, but the German name is Lieferkettengesetz in the EU. So you have to prove where things come from, where they're going from. So such a thing, right? So, and you get a fine if you don't do it. So therefore, blockchain can help you, first of all, cater to that, and second, avoid the fine. So it's a saving at the end. So therefore, manufacturing industries, they are looking for such solutions, and those who adopt it are mostly startups providing solutions for that. So this is what we see. And then, of course, AI. Because the combination of AI and blockchain is seen as some no-brainer as well. AI is purely digital, blockchain is purely digital, an excellent merge. It's still difficult. I mean, we are working on projects such as data marketplaces for AI training. So that is one possible application. And transactions between AI bots. That is something I even wrote an article about some time ago. The interaction between purely digital entities. How would they transact, well, the easiest thing is blockchain, right? So you cannot do any double spending or double usage of resources, because resources such as computation power, etc., or storage space, that is also something that has a value and will sooner or later be transacted between such, let's call it AI agents or something similar. And therefore, there's a lot of research also going on at the moment. I think that could even be the future hotbed of blockchain applicability. Again, one more reason why we work with internet computer, because they even encrypt the data. I think something that is necessary in order to allow for public adoption in that sense, in that area.
I think those are interesting, and I think you kind of segued a little into my next question. I was about to ask you about the convergence of Web3 and AI. It is something that everybody seems to be talking about nowadays. Like you said, it seems like a no-brainer that these two technologies should work together. Can you perhaps give your opinion on the convergence of these two technologies, and then perhaps also talk a little about any interesting use case that you might have seen so far, and that you are completely sold on?
Sure. So yeah, as I said, it's a hot topic at the moment, and we always have to distinguish between applicability now and in the future. Now, the most easiest thing to do, even though it's not easy, is making data available for the training of AI models, because you cannot train. I mean, of course, you can train an AI model on garbage data, right? But then garbage in, garbage out, so the resulting AI model will not yield the intended results, especially when artificial data comes in, which is, by the way, another problem and an area of applicability, the origin of data. So everybody and his friend is now trying to do something in the AI space, right? And yeah, you need data, and it is also very easy to create artificial data today. So writing entire stories, creating pictures. Okay, most of these pictures are so awful, and you see that they're coming from AI because text and three hands and 8 fingers and so forth. But nonetheless, a lot can be generated these days. So if you happen to train your own AI model, and if you have such of those artificial data packages in your training data, then you can expect a very bad result. So what you need is actually kind of a certification where the data comes from. This is an area of applicability for blockchain technology. Just providing an info, this comes from here, has exactly that hash. Super, the data is clean because I know it's genuine, or at least there's some entity responsible for it. And that's a very simple way how to apply blockchain technology for solving a real world problem. I already mentioned data marketplaces, so this is something we are working on at the moment for various entities. Future applicability goes more in the direction of things like Matrix, Shadowrun. Do you know by accident this book series, Shadowrun? It's very old. It's from the 80s.
Yes.
You know it? Really?
Yeah.
Excellent. So it's the perfect blend of fantasy and science fiction. And actually,
Right.
this was the reason why I came, or why I understood that Bitcoin is a really groundbreaking thing, because in Shadowrun, everybody pays with creds on cred sticks. And I always thought, okay, nice, right, science fiction, but it will not work because you can double spend. And when I read the white paper, I understood, hey, wait, there is a technical solution to the double spending problem. I never thought that this was even possible. Yeah. So I thought, wow, excellent. I must buy Bitcoin because this will be a big thing. And I was right. So nonetheless, Shadowrun already illustrates a world where a lot is done in a digital way, and actually also social interactions are more or less digital. Now, this is another article I wrote, and it's on Medium. It is about how to retain the value of something digital, because, well, you can always copy things. Everything which is digital can easily be copied. And if you can make copies, then of course it doesn't have a value. But with blockchain technology, you can prove, for example, the fact that only one representation of your avatar is at the moment participating in a certain event. Think of simple events, meetings, gatherings, whatnot else. So if you have an avatar representing yourself or somebody else, being programmed to give very exclusive answers, if that same avatar appears on 2 different events or 100 at the same time, what's the value of that? So to retain exclusivity and thereby value, it needs something that applies applies like the laws of physics, but to the digital world, right? And blockchain is the best thing to do that. So this is kind of a future aspect of the combination of blockchain technology and AI. Everything else is kind of mundane. So down to earth,
Yeah.
like selling data, making sure where things come from, where they're going to.
Right. This is wonderful. I think the way you kind of put it and the example that you gave, I think a lot of people would be able to resonate with it and understand the vision that you are, projecting for the future a little better. So, from a technical standpoint, what can be like the biggest hurdles that a builder can perhaps face or an entrepreneur can face in scaling a tokenization platform? I know I'm going in a different direction, but because I did have a question about AI agents and AI tokens, but I do want to first understand your perspective about scaling, platforms that are dealing with tokenization specifically. Then we can talk a little about the AI tokens.
Sure. Well, also again, the question, how many hours do we have?
Yeah,
Um,
right.
Scalability is a big issue. I mean, I'm here in Crypto Valley. I don't know if you're familiar with the name, but Crypto Valley was coined in 2014, I think, or 15, when
Right.
the first crypto companies got a foothold here. And back then, when Ethereum launched, they believed, yeah, 7 transactions per second, that would be enough. Well, no, it's not, because it created a
Yeah.
huge bottleneck and the prices were hugely inflated. So scalability was always a big issue. And when we founded our company and started to build our token economy operating system, we already took that into account and said, well, okay, you cannot do so many transactions on chain. So we have to
Hmm.
make sure that only the most essential things get written on blockchain and everything else you have off chain. So also in the sense of documentation, you cannot put megabytes of data on blockchain. Well, that's not true. You cannot put megabytes of data on the Ethereum blockchain, but on internet computer, you have even gigabytes. So a single canister can accommodate up to, I think, 300 gigabytes, which is
Wow.
unheard of in the EVM
Yeah.
space because the
Wow.
thing just works differently. It is also not really. I mean, it's not kind of a real blockchain in that sense. It's a ledger, decentralized ledger, yes, but it only maintains the last, I think, 1,000 blocks or something, and afterwards only the state matters. So it solved its scalability issue in a different way, but a very efficient way, actually. So Ethereum, Bitcoin, they just keep the entire history. Actually, that's also not true because also Ethereum truncates at some point, and only
Hmm.
the archive nodes provide you the entire history. Otherwise, you would already have, wait a second, how many terabytes? 100, 200? I
Right.
don't know.
Yeah.
Many. We also run a node and it's super expensive. Nonetheless, scalability, yes. Also transaction throughput. I mean, or actually transaction size and complexity.
Hmm.
Ethereum introduced the model of gas price because they were the first blockchain which allowed Turing complete instructions. Bitcoin didn't. So with Bitcoin, you knew exactly that a transaction couldn't be infinitely big. On Ethereum, it could be even as stupid and simple as a while one loop, right? Just loop, and that would break the blockchain. Therefore, they said, okay,
Hmm.
we have to introduce a barrier. What is the barrier? Ah, every computing instruction costs something. Great. And if you exceed a certain limit, which is the gas limit per block, then it just stops. So its processing stops. Still pay the gas, of course, as a fine, right? And do it
Hmm.
better next time. And the whole thing continues. And
Right.
breaking up this concept and making new possibilities available, this was a long journey. So data storage and what we see as as a data storage and transaction throughput, and what we see as a big bottleneck is actually this separation of processes that must run on chain versus those which can still be off chain. Also in terms of privacy on public blockchains, I mean entirely non-encrypted public blockchains, you cannot store passwords, you cannot store any confidential information. Heck, if we're talking about notarization and documentation, companies don't even want to store that information there. That's one of the issues, by the way, which I haven't mentioned before, that blockchain is perceived as completely public. So, we don't want to use that, right? So then everybody will see what we did in the past, and nobody wants that. So therefore, having a clever way to separate the on-chain process for timestamping and hashing with an off-chain process where the data is stored elsewhere and not publicly accessible is absolutely crucial. That's a good point. Just okay, I know it's late because you already asked the question and I answered it, but that's one other thing that we realized in the past is supply chain tracking, the unforgeable documentation of things. We thought always that this is a big advantage, and actually it is if applied properly. But then we found out when we talked with the first companies, hey, you can store I mean, nobody can touch this, nobody can change this forever. That nobody wanted that. Hey, wait a second, and I want to change that. I can also not change it. We said, no, of course not. Oh, wait, no, we don't want to use that technology, right? It's not about wanting to forge the books, cook the books. It's just taking away the possibility to even do so in the case that an error has happened. Right? And
Yeah.
also for this, we provided ways to do updates, to do amendments, and have an audit trail and so forth, so that everything is done in analogy to what the real world provides. And this also created a kind of a bottleneck because if you tried to do that all on chain, it's just too much, especially on Ethereum. So therefore, we switched to this on-chain, off-chain combination, which is part of our token economy operating system. Yo,
I
what
think that is going to
else?
be important. Like, if you truly want to scale these systems and this technology, and like you said, initially what we thought was going to be enough in terms of the transactions per second, that has
Mhm.
drastically changed. And why I asked this right after the AI question is just owing to the convergence of these two technologies. Now, I think as these systems scale faster, there is so much more content, there is so much more data, there is so much more that is happening because AI and Web3 is coming together. Scalability becomes truly a good problem to solve because I think everybody at some point or the other has struggled with it.
Absolutely. And going in the direction of AI and blockchain, there is something that you should study.
Hmm.
Internet computer is so powerful that they can run an entire AI model on chain. So exactly a year ago, Dominic
Wow.
Williams presented a video about him using that model to identify pictures. And that is great. So they did the whole AI model training on chain. And well, and then they also ran the AI model live. And this has a big area of applicability. It's in the area of regulatory affairs. So identification, video identification of users. If you do that, then of course you bind either manual labor or need some other off-chain processes normally. And that also means that some data is stored somewhere. Data breach is always problematic, blah, blah, blah. Internet computer is encrypted and has the highest level of cybersecurity. So if an AI model is able to just say, well, switch on the camera, right, and does proper video identification, then you can do everything that is required on chain and authorize, for example, people to do certain transactions with securities and whatnot else, because the authentication has been done without, well, any potential breach of security. That's a huge advantage. Think of DAOs. So if you want to run a DAO, then you're always anchored somehow in the real world because somebody has to update the software, somebody has to maintain things. And when it comes to such things as user authentication or identification, you need somebody to do that. You can contract somebody, but contracting somebody also means you have legal liability for the entity. In other words, a DAO, which is not fully digital, will always be kind of a bad hybrid between the two worlds. And DAOs have been created to replace normal legal entities, so the shareholder, no, what's it called? A shareholder company anyway, or a GmbH, LLC, right, and
Right.
so forth. But if you require such real-world processes, then you are not fully decentralized, not a full DAO.
Hmm.
If the regulator comes and says, "Well, we have an issue with your business model," there is somebody they can grab, right? But
Right.
if you have a way to outsource that task to an on-chain AI model, such as identification, then you can become fully decentralized. So that's a huge value actually. And this is an area where AI and blockchain perfectly blend into each other, because this is let's say the ultimate thing, the holy grail, right? An AI model running on chain.
Yeah, yeah, absolutely. I think this is mind-boggling to even think about, and I think I would definitely have to explore a lot more of ICP once we are done with this recording. And this has been such a wonderful conversation that I really don't want it to end, but I just feel the time, and we are really running out of time.
Yeah.
And you've given me so much to think about and so many new ideas to explore. And I love conversations like these that kind of give me homework so that I can sit down later and look all of this up. So I would want this kind of conversation to continue, but sadly, I think I'll have to wrap it up with the last two questions.
Mhm.
One question is something that I did truly want your opinion on, and my team asked me to ask you this as well because you're somebody who's been around for a while and you've built sustainable platforms and scalable platforms. I would love to know if you had to say make a bold prediction for the industry as a whole for the next decade, what would it be? I would love to know that because I think your prediction would be a little close to what might happen owing to your experience and insight.
I would say the most likely thing to happen is kind of a segregation into different streams. One thing is
Okay.
Bitcoin is here to stay, so it will see no, adoption even by governments and larger companies. It's the archetype of digital asset that has similar properties to gold, and therefore it will become a more common asset in everybody's portfolio. So this we will definitely see by the end of the decade and beyond. The whole token craze and token hype will also be separated. Actually, there will be an area where we see, let's say, investment tokens, which are somehow connected to a real and legit project. Those are actually the hardest to issue, and that will be institutionalized. So the possibilities to do any rug pulls there will be largely made impossible. So regulatory crackdown will just continue, besides whatever the Trump administration is doing at the moment. So I mean, they're not saying that they will allow this in the future, right? So what we have seen in the past, the ICOs, they will never ever return. It will just get harder for realistic projects to tokenize and digitize things. On the other hand, what we also see now with the meme coins, this will also just intensify into casino. That will stay. So everything that has no connection to a real world project will still be issued. Let's say maybe there will be some bigger players orchestrating it and keeping things in check, but nonetheless. Where we will see an integration, and that is more or less the bold prediction, is because everything goes digital. There will be more AI, let's say, components integrated in our daily life. So let's say even the toaster will have an AI model, and a lot of resources that we transact today without even knowing it will be tokenized in one or other form, such as energy or water, or I don't know. So whether you consume it physically or whether it's just allocated digitally by your AI agent to dispense it at some point, there will be a much more intense tracking and resource allocation in the form of tokens. I always said blockchain technology is successful when people don't even realize that they are using it because it has become part of the daily life. This will also happen in the form of proof of things. So integration of blockchain technology, for example, into car sensors to prove an accident has happened and when and where and what, so that things become unforgeable. This will always also be the case. Bold prediction in Europe, I see it rather bleak. I think in Europe, I don't know what is wrong with those guys here in control, but they are ruling out technology for an unknown reason and ruling out the entire technology without thinking of the consequences. So that will only intensify. I think at the end of this decade, maybe the one or the other politician will realize, oh, that was a bad idea. Let's reverse it. I don't know if they do. And 5 years later, so that would be the bold decade prediction, right? Even Europe will try to adopt things that will be prevalent everywhere, like in the US and elsewhere. Yep. So it's not so bold, actually. I'm a realist.
Oh no, but I think those are good predictions. I think you kind of gave us an insight into what the future looks like, and it's very exciting. I'm very bullish. I feel a little sad that you think that meme coins are going to stay, because I don't think that those are good for the industry. But I guess what the market demands, and there is always supply for it. But the other all the other predictions, I feel fairly excited about, and I think if you're going to go in that direction, then like it's good for us as an industry. So thank you once again, for sharing these insights, for giving us so much to think about. I would be remiss if I didn't ask you this one question that I ask everybody who comes on the show. You're somebody who was a chemist, and you were working in that space, and then you made a leap to Web3. What would be your suggestions to perhaps the skeptics and people who are still battling with the perception problem that Web3 has? And so what would be your suggestions for them so that they truly can start living on blockchain and they can truly become believers in this technology?
That's a very hard question, actually. What should I tell them? Because it depends on their attitude, their background, and so forth. I mean, what I can tell basically everyone is by just denying that the technology also has good properties and can be used and will be used in the future, and just relying on a certain quality of information from maybe legacy media might not give them an advantage in their future, because every new technology is sooner or later adopted and fit into our everyday lives. I, as a chemist, can tell everyone that the ability to look in a neutral way on new technology and try simply to solve problems and use technology to solve problems is a very refreshing thing to do, because well, that's what I have done all my life, right? Trying to solve problems. Was it whether it was in chemistry or in the consulting area, and then later regulatory and administrative topics, working with Bitcoin and later with blockchain, right? It's always about solving problems, and blockchain is just a technology, it's a tool. Therefore, rejecting it just out of fear is idiotic. So that's something that I can really hope people will understand.
Yeah, calling spade a spade. I think, you are doing yourself disservice, to put it mildly, if you're not gonna delve into this technology or try to even understand the kind of potential that it holds. So you are doing disservice to your future self, and I think I concur with you there. So thank you so much once again for making the time to speak to me today. I think this is a lovely way to end this episode. I'm very grateful. Any parting words before we wrap this up for good?
No, no, all fine. I would love to continue this conversation, but
Likewise.
maybe at a later stage, like in a couple of years, right? We can we can have a follow up to that and see whether or not the one or the other prediction came true.
Absolutely. You and me both. And I would love to do like a follow-up episode as well. So thank you so much once again for making the time to speak to me today. This has been really, truly insightful and lovely.
Thank you. It was also a pleasure on my side. Have a good day.
You too.